Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor and Martyn Lucas Investor Extra. If you're here on the main channel, you are watching the Lucid earnings. Lucid earnings starts in an hour and a quarter. If you are on the extra channel, you are watching Super Micro Computer, and you're seeing me from the back of the studio. That's the behind the scenes look. As you can see there, you're watching me from the back, but I am live. I'm here. I wave my hands in the air, and you'll see me here. And welcome to everybody. It's double earnings. We were requested to do double earnings tonight. So that's what we're doing here on the main channel. We are doing Lucid. On the extra channel, we are doing SMCI, Super Micro Computer. Now, it's a bit of a challenge doing two earnings at once. I don't mind telling you. However, I've done it before, but it's a lot more complicated now because we've got a much more complex audio system. And I hope you can hear me okay. And I hope everything is working okay. It's a bit of a challenge running two studios at the same time. But we like a challenge, right? We like a challenge. And it's all brought to you in 4K surround sound, and it should all sound wonderful if I've done everything right. But I just don't know, have I? Okay, if you're on the extra channel and you're watching the back of me, but you are waiting for Super Micro Computer, it will start in 40 minutes, the actual earnings call. Let me know you can hear me okay. That would be wonderful. Everybody on the main channel, you should be hearing me fine. Is it all? Does it sound normal as ever? Is everything as it should be? Let me know. That would be fantastic. All right, just to give me some extra confirmation. So let's go to the chat. I can't do the chat. Well, I can do the chat in extra. I'll attempt to do that as well, actually. So I'll tell you what I'll do. I'll switch to the SMCI on my top monitors, and on my bottom monitors, I will be on Lucid. There we go. That's how I'll do it. That'll make more sense. So everybody on extra, Stephen Lewandowski, Bart, hello, how you doing? James 007, extra channel audio perfect, wonderful, great, thank you, James. Bart, yes, we can hear you on extra, lovely, lovely. You're watching Super Micro Computer from the back of my studio here on the main channel. I don't think I yet have. Oh, that was the old poll, wasn't it? That's the old stream. So let me end that. Let me give myself the new stream, Lucid earnings. Let me pop that out of there, slide that up there, and let me see if I've got anybody in the chat on the main channel. Okay, great stuff. Double earnings tonight, so we can do it. It is possible, even with the much more complex audio setup that I have now. It's a bit of a challenge, but like every challenge, it can always be overcome if you persevere. So let me check the comments on the main channel. So transport complete. Terry Rose, you've switched from one world to the other universe. I don't feel like I've actually went anywhere. Amina, no, you didn't. If you're on the main channel, you are still on the main channel. Just a different stream. Tish Armstrong, I'm here. So how long have you been collecting XRP? Me? I bought XRP when it was 38 cents, but I don't own XRP right now because we decided to make the channel mainstream and all about being completely transparent. So my channel is now, I only own the S&P 500 to be completely transparent. I mean, oh, you're talking to Tish. She's talking to Tish. She's not even talking to me about XRP. I apologize. There we go. Oh, my God. November after Trump won. Whoop, whoop. Lucid. Kent Paranormal. Yep, this is your earnings, mate. You got your earnings booked in. So if you're on the main channel, we're doing Lucid. If you're on the extra channel, we are doing Super Micro Computer. So what I'm going to do is I'm going to give everybody on the extra channel. Here is Lucid in the chat. If you want to just pop in and say hello, and you can see what we're doing. And everybody on the main channel, I'm going to give you all the link to SMCI. and you can look behind the scenes and you can see what we're doing there. All right, so stand by. It's just over 30 minutes to go for SMCI, and we've got about an hour to go before Lucid. But we will get the numbers any second, so please stand by. Right, hope everyone having a great Tuesday. JJ 8-Ball, same. Amina, we have got a conversation here going on between Amina and Tish. I love it. Hi guys, what's the sentiment for Lucid? Well, Jeff Pereira, we've been covering Lucid for several years now, and disgusted by Peter Rawlinson. He produced and achieved nothing. All he did was take all the money out for himself. He was one of the highest paid CEOs of all time. Took all the money. Disgusting. And so the Lucid car is arguably the best EV in the world. It's just we're not too impressed with Peter Rawlinson paying himself all the money and driving the stock into the ground. But anyway, there we go. So, SMCI on the extra channel. You want the figures? I'll give you the figures. Here we go. So, estimated 30 cents a share. It's 31 cents a share. It's a beat, but a very, very, very disappointing beat. It's the lowest now for over a year. On the quarters, so it's not good at all. In fact, it's goes back to Q1 of 24, so more than a year, nearly a year and a half actually. Its worst performance, so it's been declining now for quite a while. But it is a beat. If you want to be happy about that, I wouldn't be. I don't think it's really performing or growing or going anywhere, quite honestly, at the moment. But there it is. That's SMCI. Okay, that's happening over on the extra channel for you. Let me bring up Lucid's information, and I'll bring that to you as well. Here we go. On the main channel, we're doing Lucid. LCID. That's the ticker. Let's have a little look. We've got the numbers out there yet. Oh, right now, Lucid, the very opposite. We've got estimated 23 cents a share loss to actually lose 20 cents a share. Much better. That's their best ever performance. Lucid is consistently up. Nice beat. Very comfortable. Probably a good buy, I would say now. Let me just have a look at the numbers for you and tell you. Let me just have a quick look here. I don't need any of that, so I'll shut all that down. Some other tabs open. Lucid, so LCID. I shall give everybody on the extra channel SMCI's numbers. I'm talking about the factor grades. So for Lucid, we have got, and I'll share it on the screen for you on the main channel, we have an EPS negative of 0.94. Now let's have a look at it. Revisions is B, up from C. Momentum is B minus, down from B. Profitability F, making no money, just can't ramp up. But now Peter Rawlinson's not robbing all the money. Maybe it'll do better. Growth B, up from B minus, and valuation is still C minus. But that was of yesterday. This will improve today because earnings has been a beat and a good beat and moving in the right direction consistently now. So expect valuation to be maybe a B tomorrow, or certainly a B minus tomorrow. Yeah, a B minus, maybe a C tomorrow. All right, so there you go. Lucid's going in the right direction. You might consider, it's a high-risk stock, but you might consider it now to be a buy. Remember, this was once $40 a share. There's no reason for it to go any lower than this. This could be a good time to buy Lucid. All right, I'm just checking everything on extra channel. Yeah, that's working well. Now let me give you the numbers for SMCI. And there is a short. Oh, by the way, on Lucid, I should remind you, there's a short interest of 11.51. Not enough volume and not enough interest for a short squeeze. So don't be thinking that anytime soon. But it has a lot of short interest, so it's a lot of down pressure at the moment. SMCI on the extra channel. I'll give you the numbers now. Stand by. Here we go. Super microcomputer, forward earnings, forward PE ratio, price to earnings ratio, 14 times earnings. So it's making money, but it's going down. It's getting lower. 14 times earnings with a 17% short interest. Again, not enough volume or enough short interest, but a lot of downward pressure on the stock from SMCI. All right, there we go. Now we got half an hour to go before we start SMCI's earnings on the Extra channel. Now, if you're watching on the Extra channel, you're watching SMCI. You're watching from the back of the studio, as at the front of the studio, I'm doing Lucid. Could you please tap the like button, and it will share it out, and consider subscribing to the channel. That would be absolutely wonderful. Please click subscribe and tap the like. If we get 100 likes, it will share it out. Here on the main channel, if I could ask you to subscribe and tap the like button, that would be wonderful. So let's see which live stream gets the most views tonight. The one from the back of my head or the one from the front. I don't know what that tells me. But here on the main channel, you'd expect it to be bigger. You've got a much bigger audience, and of course, you're getting the full exposure, right? 107. 21 likes, though. That's rubbish. Tap the like button. Let's get this shared out. We get 100 likes. We'll share this out. More people will get to hear about Lucid tonight. Please do tap the like button. Let's see which one wins tonight. On the Extra channel, we've got 10 likes with only 5,000 subscribers. So much better, really, in relationship. And it's the back of my head, so I'm starting to get a complex now that everybody wants to watch the back of my head. Anyway, there we go. Come on, guys, sort that out. Tap the like button. Right. How you doing? So for Jeff, I'm doing well indeed. You sound good. Fantastic. I got 930 shares of Lucid. Might be not a bad time. Yes, I don't handle the first few dips well, but I got a num pretty quick, says Amina. Puts are the money, says BSP Trading. Walker wonders why. Hi all, can you cover SMCI? I am covering SMCI. Safa. I am. He's over on the Extra channel now. He discovered it. The biggest question for Lucid is how are they planning to scale up production? That is the question. Sorry for the chat. We were chatting. That's absolutely fine. Don't apologize. It's great. I just shouldn't have jumped in. I should just let you get on with it. Anyway, Safa, come on to the Extra channel. That's right. Sorry, Martin, we are chatting while we wait. That's okay. Don't apologize. I'm watching both earnings at the same time. James. James is watching both earnings at the same time. I love it, love it, love it. Now, if you're on the main channel, please click subscribe. If you're on the Extra channel, please subscribe. It's a separate channel. Whenever we get asked to do two earnings at the same time, this is what we do. From the front and the back of the studio, you are watching what's going on and you're listening in. This is a live show from the front and back of the studio. One is broadcasting Lucid and one is broadcasting SMCI. So if you could tap the like button and subscribe on the Extra channel, that will help us out enormously. Okay, I believe the company's potential, if well managed, probably better than Tesla. But yeah, it's a better car. Lucid is without doubt a better car, but Peter Rawlinson did it for his own personal gain. So it was terrible. Can we look at AMD? AMD, I have to focus on my members LT. We are doing two earnings at the same time. To try and do three, might be pushing my luck. All right, we got two channels running at the same time. So we're going to skip AMD, I'm afraid. RB, smashed. Smash the like button, everyone. Let's get to 100. James says Extra channel. Let me go into the Extra channel now and read out the comments. Exit Grabana, good evening. Bart, they should raise. All the weakness has been factored in from the last week. I reckon on the call they will drop a dime and it will shoot, says Bart Puldenik. Who else have we got there on the Extra channel? We've got Exit Grabana. Safa from United Arab Emirates has found the channel. Okay, great. If everyone could tap the like button and consider subscribing, that would be great. 29 minutes to go for the earnings for SMCI and 58 minutes for Lucid. Now, of course, the reason why the markets are down today, no matter what stock you're in, pretty much across the board, is because tomorrow is the FOMC report. Huge day tomorrow. We're going to cover the FOMC report live. We're going to be with Jerome Powell. Now I'm going to drop the link in for both channels now. Let me go and grab the link. Okay, I've got the link. There it is. There's already people waiting. It's going to be a huge event tomorrow. So on the extra channel, SMCI, here is the link. FOMC. And there it is. Okay, I've dropped that in the chat for you. If you want to join me tomorrow for the live FOMC report here on the main channel, here it comes. There you go. I posted it 3 times so it pops up. You can see it. Okay, the overall markets are, they're taking a bit of a dive for the morning. I'm down 4 grand. That's perfectly okay. We'd expect that from the night before the FOMC report. It's priced in, though, that we're going to get a rate pause. If you want to vote, please do vote. I'd love to see your thoughts. And there we go. So we're all set. We got asked to do an earnings tonight, double earnings. That's why you've got the back of my head on the extra channel. The studio is bright red today with warnings for tomorrow. But there you go. Let me have a quick listen in. Let me see if I can hear what's going on. We're all set. We got asked to do an earnings tonight, double earnings. Now that might end up sounding a bit odd because you might get a feed through, an echo feed through. Hopefully not. Let me see if you did. You can hear what's going on. Yes, you will. You'll get an echo in a second, but that will go away in a moment. I just wanted to monitor how it sounds. How does it sound on the main channel? Because you might get a feed through. Okay, it sounds better on the. It sounds much better on the. I've got an idea. I wonder if I can do this. I've just got an idea. No, I can't do it live, can I? Can I do it live? I've got 20 minutes. Shall I try and do it live? Oh my gosh. Look at this. I'm going to try and improve my audio on the extra channel. Tell me if this sounds better. This is pretty crazy. Here we go. All right. Now then, I'm going to try and do it. Main mic. Main mic. Okay. So the first plugin I'm going to add is AU multiband compressor. Okay, here we go. This might be hard to do like this. All right, I'm going to try and do it. I'm going to try and improve my audio on the extra channel. Let's see if I can do it. Let's see if I can do it. All right. Okay, I've added that. Hopefully that works. I'm now going to add my graphic. Oh, this is going to be tough. What's this one called? We've got time to do this. We've got 20 minutes to go. So I'm going to try and improve it live during this show. So the next one is AU Graphic EQ. All right, let me have a look at those numbers. 6 dB. All right, here we go. One, two, three, four, five, six. Okay, 6. All right, I've done that one. And 1, 2, 3, 4, 5, 6, 7. Going up to standby. Let's see if this works. 1, 2, 3, 4, 5. Okay, there's that one. Nearly done. Okay, I think that's about right. And then there is the dynamic processor. Let's see. You just tuned in. We're just waiting for the earnings to start, so we're just making some adjustments. And the last thing was dynamic processor. And I just want to make sure that's about right. What have I got this set to? All right, I'm trying to just, this is hard to get done like this. Ah, there we go. Okay, I think that's about right. Okay. Martyn. Save. Okay, tell me now, is that any better? So what I've done is, while we're doing this, we've just managed to upgrade our audio on the extra channel as well as the main channel. So let's tell me now, on the extra channel, does this sound any better? What you're listening to now is the improved audio. Hopefully that sounds good for you. Let me have a quick listen to myself. I'll get a bit of an echo, but let's have a listen. We're doing this. We've just managed to, yes, now I'll turn it off. It should sound thinner now. You ready? Here it comes. Okay, now I've turned it off. So does it sound thinner? Now it should sound thinner to you. If you listen to this, it should sound thinner. Okay, now I've turned it off. So does it sound thinner? Okay. And now I'll turn it back on again. Okay, and now I've turned it back on again. This should sound better. How does it sound now? Okay, a little bit of extra work while we're waiting. We've got 15 minutes to go. We might as well make the most of it. Okay. And now I'll turn it back on again. Okay. It sounds good, but I'm listening to the extra channel though. Back on again. This should sound better. How does it sound now? There you go. It does sound better. Did you notice the difference on extra, how it got, how the audio was improved then? If you did notice a difference, tell me. If you didn't, it's absolutely fine. On the main channel, you can't hear the difference. There's been no difference. On the main channel, you can't hear anything. On the extra channel, I was doing it. So there you go. It was only changing on the extra channel, wasn't changing on the main channel. You didn't hear any difference. Okay. Better. Yes, it is better, isn't it? Absolutely. We might as well have made that adjustment while we were waiting. So then, I am watching the main channel in my TV and extra channel on my phone, says James. Yes, I'm glad you could tell the difference. Okay, there we go. Now then, if you just tuned in, on the main channel, we're on standby for Lucid. We've got 45 minutes before the call begins. We've got the numbers. I can tell you now. Let me give you the numbers for Lucid. They did beat on earnings. It was a great beat, actually. 20 cents loss rather than 23 cents loss. And it looks very, very nice. When you look at it, the company is improving all the time. Look at this. This is good. This is very, very good. It's a nice beat. It's their best beat so far. Very, very good for Lucid here on the main channel. On the extra channel, we're covering SMCI. SMCI on the extra channel. Thank you very much, Saab. On the extra channel, I just done some work on the fly because we've got a much more complex audio system. I've never done double earnings like this before, but I managed to work on it while I was doing it. So that's good. Supermicro Computer starts in 15 minutes. So stand by for SMCI. Oh, and there is the music coming through. We've got it already now. So SMCI is just 15 minutes to go. So I'm going to be checking in on that. SMCI. So we're going to be listening to that. The moment the call begins, I will send it to you. Let me refresh the screen. There it is. Okay, good stuff. Let me just mute that. Okay. SMCI is on the way. Just a few minutes ago. Let me put you back with the chart. There you go, looking good. And here on the main channel, we're doing Lucid. So in about, exactly 11 minutes from now, unless they're late, and they're always a minute or two late, when we start the call for SMCI, I will mute myself on the extra channel and you won't hear me anymore until it ends. I will then take over and only be broadcasting my voice on the main channel for Lucid. So, Megs says, good, but your voice is nice. Thank you, LT. India attacks Pakistan, markets might crash. India attacks Pakistan, markets might crash. I've not got any verification of that, but thank you for letting me know. Dab, robot, no idea what that means. Check news, India attacks Pakistan, 2 nuclear countries at war, bad for markets. Well, the overall market is down today. In fact, just come back up again. It's only down because of the FOMC report. Let me go into my latest news on my wires. Let me have a quick look. Nothing being reported on Bloomberg. Here we go. We got a breaking news story here on Sky News.
The Pakistanis were also, when you hear them talk about missile threats and nuclear missiles, they are effectively saying to the Indians, don't invade. Be very careful, because if this gets out of hand, we have a nuclear capability. But I think that, of course, nuclear use in response to something like this isn't realistic. So we should be very careful what we're talking about here.
Yes,
breaking news. We're going to come back to the earnings. It hasn't started yet.
Is around the fact that they are both nuclear armed states, and in these instances, you know, miscalculation can lead to escalation. So that is where the concern is. But we're just getting some more information coming in. The Pakistan security sources have told Reuters that at least 1 child has been killed in the attack, and it appears that a seminary in the Pakistani city of Bahawalpur.
Okay, we're not going to stay on that news, but we can just confirm there is an attack. Pakistan, looks like India attacks Pakistan, 2 nuclear powers. We can confirm that. So we'll pick that news item up after, of course, our earnings. Thank you very much for letting me know. I appreciate your information there came in, so I was able to check it and bring it to everybody. Thank you very much for that information. Okay. Good stuff. Right then, we're just 10 minutes away now from SMCI's earnings report and 40 minutes away from Lucid's earnings report. So please stand by. This is cool. If everyone could tap the like button on both channels, the main channel and the extra channel, I'd much appreciate it. They are 2 separate channels. We're doing double earnings tonight because you requested it. So please do. It will share it out to more people. We've only got 50 likes on the main channel. If you share it out, we can get the word out about Lucid to more people. With 50 likes, YouTube will not suggest the video. You need to do 100 to get it suggested. So if you want more people to know about Lucid, and I do think it could be a time to buy, now we got rid of Peter Rawlinson, this could be great for Lucid. They've got a good earnings beat tonight, so tap the like button. We'd like to rank for this on Google and YouTube, and that would be good for the stock as well. More people would learn about it. So please tap the like button and consider subscribing if you're new to the channel. Thank you very much indeed. We're just about to hit another milestone, a very, very important milestone on the main channel. Look at this. We're now coming up to 80,000. Look at that. 79,350 subscribers. So thank you very much, everybody who is supporting our channel. Really do appreciate that. On the extra channel, we've got we've got an audience nearly as big as we do on the main channel, because SMCI is a much more popular stock. It's only because we were requested by Simon, Kent Paranormal, first. If you are a member, you can ask me to do an earnings for you, and I will, take care of my members. But it's much bigger, SMCI. A lot more people look at SMCI than do Lucid. So on the extra channel, tap the like button, folks. You might get more likes tonight than Lucid here on the extra channel. So please do that. That'd be absolutely fantastic if you could do that. It'd be awesome. All right, so let's just get ready. No idea what that keeps doing that. Okay, got a few technical issues, but hopefully things will work out in a minute. Okay, 8 minutes to go for SMCI on the extra channel. The moment Supermicro starts, you won't hear from me again until the end of the call. At the end of the call, you'll be transferred to the main channel to join us here for Lucid, to carry on the conversation and tell us how wonderful or how rubbish you think SMCI is. So there you go. How many likes have we got now? 60 likes for Lucid, and we got 22 likes for SMCI. So SMCI is much more popular on the extra channel, which is only 4,000 subscribers. This is nearly 80,000 here on the main channel. So SMCI is a much more popular stock. There's no doubt about that. Come on, people, smash the like button. Mitchell Thermobolt. Yes, you do want to do that, because if we can get this shared out, it'll rank on YouTube and more people will hear about Lucid beating on earnings tonight. It would be absolutely great. It's a very red market at the moment because we're preparing for the FOMC report tomorrow. I will give everybody the link to the FOMC report. Will we get rate cuts? Well, let me give you all the link for the FOMC report in the chat. There you go. Book your front row seat. You might want to just click like and book your front row seat for tomorrow. It goes live in 20 hours from now. It'll tell you your time zone. If you click on it, I will go to the extra channel, give you the link as well. Here it comes. There you go, 3 times so you can see it. That's tomorrow's event if you want to join me for that. All right. Okay. We've got 5 minutes to go. SMCI is on standby. Now then, they might be a couple of minutes late. That's quite normal. Most of these companies go 1 or 2 minutes late. Let me just check the audio. Yeah, I hear it coming through. Yeah, you can hear it coming through on the extra channel. So I just want to mute that a moment. Let's get ready. Okay, I'll start bringing in the audio in the next couple of minutes, and then we'll go on to standby. Once it starts, I shall simply switch from the main, the extra channel to the main channel, so you'll just listen into the call. We got a lovely little troll just decided to come in. John, another fake guru. Let's make John look silly on the screen. There's John, another fake guru. The guy is a total clown. I love it. I like to be a clown, actually, John. I'm very happy being a clown because, you know, we work really, really hard. We are building a community in 69 countries. We've got 1,000 members, just coming up to 80,000 subscribers. We're doing double shows to help people out. We've got the best technical chart analysis you could get with Sensei. We've got a whole team now. We've got Vaz doing a great job with our EV tolls, and the studio is getting better and better every day. The cameras, the lights, the audio. So if I'm a clown, I'm very happy to be a clown. Very happy. We have a wonderful family. I'm earning a living on YouTube, having a wonderful life. And I'm accompanied by wonderful people every day. So if that makes me a clown, then I'm happy to be your favorite clown, John. So thank you for your compliment. John must be miserable. Well, maybe he is. Maybe he is. I don't know. I don't know. Let's let him do what he wants. We don't mind. We keep on going, and it's all good. He's giving you information. What is he doing? What is wrong? And it's free. Yes, of course. It's free. You can be a member. 98% of our live viewers are members, by the way. We go live 12 hours a day. Our aim is to provide the most honest, most real, most live, most trusted service on YouTube TV. I believe we do that. And every day we try and improve it, make it better. We have show notes every day. I talk to my team and how can we make it better, look better, sound better, everything. We try every day to make it better. And I believe we've got something we can be proud of. But there's always somebody that says, it's rubbish for no reason, just because they've got nothing else to say. That's okay. I wish everyone the best. I only wish everyone could be as happy as we are here. Not everybody is. And that's perfectly okay. Anyway. Thank you, Jose Angel. What country are you from? Welcome to the welcome as a guest. Right, we got 2 minutes to go before Super Microcomputer on the Extra channel. So I'm listening in now. So if you're wondering what I'm talking about, I'm actually doing 2 streams at the same time. Must be a clown, right? Clowns can do that. Clowns can juggle, can't they? So I'm a clown. I could do 2 streams at once. There is the Extra channel for everybody in the chat. And I'm going to give everybody in the main channel. Hang on a minute. Yeah, I just give everybody on the main channel, the Extra channel. I'm now going to give everybody on the Extra channel, the main channel. Did I get that right? Did I get that right? I think I did. You could go and see what we're doing. We're doing both earnings at the same time in different places. From the front of the studio to the back of the studio, 2 separate streams. All right. Anointed Flowers. Hello all. What did rates do? Rates. The FOMC report is in the morning. We're going to cover it live. Look on the homepage of the channel. You'll find it there. Join us live. And we're going to cover it live. So here we go. We've got 1 minute to go for SMCI. If you'd like to follow me on X, there's the X. There's Instagram. If you'd like to follow me on X. Okay. If you'd like to become a member, there's the membership link. Discord. We have a premium service on Discord. We do free training, chart analysis. We've got training videos, how to read charts. You can talk to us live. Send me a friend request. I talk to everybody that's premium on our Discord server. If you want some free stocks of Robinhood USA, there you go. If you want free stocks of Robinhood UK, there you go. Literally, if you click on that link, you'll get a free share of something. I'll get one as well. It's very exciting. If you want the mailing list, if you want your birthday card and stuff like that, there you go. Right, let me listen into SMCI. Okay, we're listening now for SMCI. Stand by. Okay, we are on standby. Once the call starts for SMCI, I will stop talking to you on the Extra channel and you'll be listening into that. Okay? You can keep hearing the music come in and out because I'm monitoring it, okay? So please stand by. All right, stand by.
Operator today. At this time, I would like to welcome everyone to the Super Microcomputer Inc. SMCI US third quarter full year 2025 earnings call. With us today are Charles Liang, Founder, President, and Chief Executive Officer, David Wiegand, CFO, and Michael Sager, Senior Vice President of Corporate Development. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star followed by 1 on your telephone keypad. I would now like to pass the conference over to Michael Sager.
Victoria, thank you. Good afternoon, and thank you for attending Supermicro's call to discuss financial results for the third quarter, which ended March 31st, 2025. With me today are Charles Liang, Founder, Chairman, and Chief Executive Officer, and David Wiegand, Chief Financial Officer. By now, you should have received a copy of the news release from the company that was distributed at the close of regular trading and is available on the company's website. As a reminder, during today's call, the company will refer to a presentation that is available to participants in the Investor Relations section of the company's website under the Events and Presentations tab. We've also published management scripted commentary on our website. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including without limitation those regarding revenue, gross margin, operating expenses, other income and expenses, taxes, capital allocation, and future business outlook, including guidance for the fourth quarter and full fiscal year 2025. There are a number of risk factors that could cause Supermicro's results to differ materially from our expectations. You can learn more about these risks in the press release we issued earlier this afternoon, our most recent 10-K filing for fiscal year 2024, and our other SEC filings. All these documents are available on the Investor Relations page of Supermicro's website. We assume no obligation to update any forward-looking statements. Most of today's presentation will refer to non-GAAP financial results and business outlook. For an explanation of our non-GAAP financial measures, please refer to the company presentation or to our press release published earlier today. In addition, a reconciliation of GAAP to non-GAAP results is contained in today's press release and in the supplemental information attached to today's presentation. At the end of today's prepared remarks, we'll have a Q&A session for sell-side analysts. I will now turn the call over to Charles.
Thank you, Michael, and thank you everyone for joining us. As previously announced, our fiscal Q3 net revenue total $4.6 billion, coming in lower than our original forecast. This decline was primarily due to a customer waiting and evaluating AI platforms between the current Hopper and the upcoming Blackwell GPUs, leading to a delayed commitment. We expect many of these engagements to materialize in the June and September quarters, strengthening our confidence in meeting our long-term growth target as we close out this eventful fiscal year. Despite macroeconomic conditions and tariff impact, our ability to expand the market share in IT and AI remains strong. On the earnings front, our fiscal Q3 non-GAAP EPS stood at 31 cents per share compared to 66 cents last year. This decline was largely driven by an inventory write-down of all generation GPU and related components, while the new platforms are finally ramping quickly about now. Although our quarterly performance did not align exactly with our expectation, we successfully fulfilled our commitment to regain financial regulatory compliance. At the same time, we continue to enhance technical innovation and development, which results in successful high-volume delivery of our new generation AI platforms at the end of March. Looking ahead, some major background new innovations are set to service the market in this quarter and the new fiscal year, especially our coming soon DCBBS. With a clear time-to-market advantage, Supermicro once again leads the AI infrastructure technology and DLC solutions. This strong position enables us to explore new opportunities and expand the market share. During the quarter, we achieved volume shipment of air-cooled 10U and liquid-cooled 4U NVIDIA B200 HGX systems. Both are exactly the first to the market again, as well as GB200 NVL72 racks. Additionally, we start to offer AMD MI325X solutions to further broaden our AI portfolio. Leveraging our system building blocks, we will again offer time to market on the upcoming new platform, such as NVIDIA B300, GB300, and AMD MI350 platforms this summer for customers seeking leading technology, more optimized, higher density, and greener AI solutions. Build on our strong foundation of technology leadership, building block solution, and green computing DNA, we have been deeply focused on developing the industry's first end-to-end AI IT data center total solution. We are now about fully ready to share this exciting news with the market in the coming days by launching our brand new data center building block solution. We call it DCBBS, featuring our second generation system liquid cooling technology. We call it DLC2. With DCBBS, we are able to dramatically shorten customers' efforts to build a data center, reduce their cost, and most importantly, make their data center better quality and performance, greener and with higher availability. DCBBS consolidates critical components, including AI server systems, storage, rack, plug and play, all different kinds of switches, DLC systems, water tower or dry tower, chiller door, power shelf, battery backup unit, typical BBU, on-site deployment, networking design, cabling, and data center end-to-end management software, and all different scopes of services into a streamlined process. The true value of DCBBS lies in its ability to reduce power consumption, optimize space, and decrease water usage, delivering up to 30% lower TCO. More importantly, it accelerates new data center deployments and upgrades existing data center in a matter of months or even weeks, rather than many quarters or years, driving significant improvement in data center time to deployment, we call TTD, and time to online, TTO. One of the key components of DCBBS is our industry-leading DLC solutions. Supermicro remains at the forefront of driving industry adoption of DLC technology, direct liquid cooling technology, setting new standards for performance, efficiency, and sustainability. Last year, we shipped 4,100 kW AI racks equipment with DLC, helping our customers reduce energy costs by up to 25 or even 30%. We are committed to double this volume in the coming year, further amplifying the impact of green computing. With the upcoming DLC2 technology, Supermicro will be able to deliver even greater savings and benefits to our customers. For example, it will save power and water up to 40% and reduce data center noise level down to about 50 dB. That is almost as quiet as a library. We are going to announce the detail in the coming days. Green computing can be everywhere, and with our DLC2 solutions, we are making that vision a beautiful reality. Our long-term investment and leadership in DLC has solidify a sustainable competitive edge, providing economics of scale and keeping us far ahead of the competition. Our global operation continues to expand, with our new Malaysia campus begin shipping product to partners. Meanwhile, our facility in Taiwan and Europe are scaling up their capacity and capability, providing customers with flexible options for their logistic choice and minimize their cost during the market and tariff uncertainties. To further strengthen support for key partners and align with government initiatives, we continue to expand our U.S. domestic manufacturing capacity, including new facility in the Midwest and other locations. This strategic expansion will allow us to meet rising demand while continuing to enhance our commitment in quality, security, and TCO, TTD, and TTO. In summary, fiscal Q3 was dynamic and productive. We successfully navigated financial challenge while continuing to strengthen our leadership in product and technology innovation. Our first-to-market advantage in AI infrastructure, along with the expanded reach of DCBBS, data center building block solution, and advancement in the DLC technology, further solidify our industry position. I remain highly confident and optimistic about our long-term strong growth and market share gain. However, near-term macroeconomic and market uncertainty make it difficult to precisely forecast the pace and the technology adoption. Despite this, I'm confident that we will close the fiscal year on a strong note. Given the current condition, we anticipate Q4 revenue of at least $6 billion and will resume providing a broader forecast range once we have better visibility. Before passing the call to David for the financial overview, I want to thank you all for our partner, customers, investors, and Supermicro team members, and express my deep appreciation for their continued support. With that, I will now turn the call over to David.
Thank you, Charles. Fiscal Q3 2025 revenues were $4.6 billion. This was up 19% year over year and down 19% quarter over quarter. Q3 revenues were down quarter over quarter as certain new platform decisions by customers moved some sales into Q4 and later. AI GPU platforms again represented more than 70% of revenues, with AI GPU customers in both the enterprise and cloud service provider markets. Our design win pipeline remains robust, and we expect continued growth in Q4 as we ramp up production of our data center building block solutions, DCBBS, based on new GPU platforms. As a leading U.S. technology company, we focus on extensive rack scale and DCBBS technology and capacity investments in the U.S., which is complemented by our investments in Taiwan and Netherlands.
We're just cutting into the extra channel to let you know that India has just attacked Pakistan. This is breaking news. We're covering it on the main channel. We'll hand you back now to the SMCI earnings, but this is two nuclear powers attacking each other, and Pakistan have already retaliated to India. If you're interested in that news, join us on the main channel. We'll hand you back now to SMCI.
This was up 3% year over year and up 38% quarter over quarter as we saw strengthened enterprise adoption of new AI and CPU platforms. The OEM appliance and large data center vertical revenues were $2.6 billion, which represented 57% of Q3 revenues versus 75% in the last quarter. This was up 35% year over year and down 38% quarter over quarter. Two existing CSP/large data center customers represented 22% and 14% of Q3 revenues. Emerging 5G telco edge IoT revenues were $48 million, or 1% of Q3 revenues. Server and storage systems comprised 97% of Q3 revenue, and subsystems and accessories the remaining 3%. By geography, the U.S. represented 60% of Q3 revenues, Asia 30%, Europe 6%, and the rest of the world 4%. On a year-over-year basis, U.S. revenues increased 3%, Asia increased 77%, Europe decreased 3%, and the rest of the world increased 83%. On a quarter-over-quarter basis, U.S. revenues decreased 28%, Asia increased 76%, Europe decreased 69%, and the rest of the world increased 45%. China continued to represent less than 1% of sales in Q3. The Q3 non-GAAP gross margin was 9.7%, which was down 220 basis points quarter over quarter from 11.9% in Q2, primarily due to higher inventory reserves for older generation products, lower volume, and accelerated costs to enable time to market for new products. Q3 operating expenses on a GAAP basis decreased 3% quarter over quarter and increased 34% year over year to $293 million. On a non-GAAP basis, operating expenses decreased 5% quarter over quarter and increased 30% year over year to $216 million. Q3 non-GAAP operating margin was 5% compared to 7.9% in Q2 due to lower revenues and gross margins. Other income and expense for Q3 was a net expense of $31.7 million, consisting of $13.4 million in interest expense, principally from convertible bonds, and other losses of $18.3 million, principally from a non-cash $30.3 million loss on the amendment of the 2029 convertible bond, and adverse foreign exchange impact and other miscellaneous expenses offset by higher interest income. The GAAP effective tax rate was 5.1%, resulting in a GAAP tax expense of $6 million for Q3. The non-GAAP effective tax rate for Q3 was 15.5%, resulting in Q3 non-GAAP tax expense of $36 million. Q3 GAAP diluted EPS of 17 cents and Q3 non-GAAP diluted EPS of 31 cents was lower than our guidance due to lower revenues and gross margins. The GAAP fully diluted share count for Q3 was 622 million, and the non-GAAP fully diluted share count was 636 million. Cash flow generated from operations for Q3 was $627 million, compared to cash flow usage of $240 million during the previous quarter. The Q3 closing inventory was $3.9 billion, which increased by 7.6% quarter over quarter from $3.6 billion in Q2 as we prepare for higher shipments in Q4. CapEx was $33 million for Q3, resulting in free cash flow of $594 million during the quarter. During the quarter, we amended the terms of our existing 2029 convertible notes and raised $700 million in gross proceeds in a new 2028 convertible note from the existing convertible investor group. The proceeds from the new convertible note offering will be used to strengthen our working capital, enable continued investments in R&D, and expand global capacity as needed. The closing Q3 balance sheet cash position was $2.54 billion, while bank and convertible note debt was $2.49 billion, resulting in a net cash position of $44 million versus a negative net cash position of $479 million last quarter. Turning to the balance sheet and working capital metrics compared to last quarter, the Q3 cash conversion cycle was 124 days versus 104 days in Q2. Days of inventory increased by 3 days to 81 days compared to the prior quarter of 78 days due to key component purchases for higher expected Q4 shipments. Days sales outstanding increased by 9 days quarter over quarter to 56 days, while days payable outstanding decreased by 8 days to 13 days. We are closely monitoring the macro environment, tariffs, and the technology transition to new platforms. The outlook for the fourth quarter of fiscal 2025 into June 30, 2025, we expect net sales in the range of $5.6 to $6.4 billion, GAAP diluted net income per share of 30 cents to 40 cents, and non-GAAP diluted net income per share of 40 cents to 50 cents. Given this dynamic environment, we are being prudent and expect gross margins to be approximately 10%. GAAP operating expenses are expected to be approximately $319 million and include $74 million in stock-based compensation expenses that are not included in non-GAAP operating expenses. The outlook for Q4 of fiscal year 2025 fully diluted GAAP EPS includes approximately $63 million in expected stock-based compensation expenses, net of tax effects of $18 million, which are excluded from non-GAAP diluted net income per common share. We expect other income and expenses, including interest expense, to be a net expense of approximately $16 million. The company's projections for Q4 GAAP and non-GAAP diluted net income per common share assume a GAAP tax rate of 14.9%, a non-GAAP tax rate of 16.5%, and a fully diluted share count of 628 million for GAAP and 642 million shares for non-GAAP. We expect CapEx for Q4 to be in the range of $45 million to $55 million. For the fiscal year 2025 ending June 30, 2025, based on the Q4 guidance above, we are expecting revenues of $21.8 to $22.6 billion. Michael, we're now ready for Q&A.
Great, Victoria. Let's go to Q&A.
Of course. We will now begin the question and answer session. We ask that participants only ask one question and one follow-up. If you would like to ask a question, please press star followed by 1 on your telephone keypad. If for any reason you would like to remove that question, please press star followed by 2. Again, to ask a question, press star 1. As a reminder, if you are using a speakerphone, please remember to pick up your handset before asking a question. Our first question comes from the line of Samik Chatterjee with JP Morgan. Your line is now open.
Hi. Hi. Thanks for taking my question. Maybe for the first one, I know in your prepared remarks you mentioned that the macro is making forecasting a bit tougher, and you're talking about prudence in your guidance itself. But maybe if you can sort of share what you're hearing from your customers. Are customers already talking about pulling back some orders, or is there any change in customer order trends that you're seeing because of the macro? And given just where we stand relative to the June quarter, already we are a month in, I would assume we would have more sort of visibility into the June quarter rather than having to put sort of some level of conservatism in. So have you seen a lot more volatility in terms of customer orders recently to drive that prudence in terms of the revenue outlook for June? And have a follow-up, please. Thank you.
Yeah, I mean, very good question. Basically, June will be our traditional strong quarter. And for sure, the tariff and the macro economy uncertainty that concerns some customers. But at this moment, we see a strong order. So I believe we will have a strong quarter for June. And September next fiscal year will be even stronger because our new product, especially Blackwell, is fully in volume production now. So we get more and more order for Blackwell and expect strong growth start from now.
Okay, got it. And maybe for my follow-up, on the gross margin side, previously you had talked about margins improving as you start ramping new products, whereas the guidance itself implies a bit more cautiousness on that front. Has there been a change in the pricing landscape for the new products that you're seeing in the market, or is this more about the tougher pricing environment for Hopper-based products? Thank you.
I think it's a combination of concern about tariffs, and so conservatism there, and also with some, obviously also some impact from the changeover in technology platforms.
Sorry, just to clarify, so in terms of the changeover, that is driving some headwinds to the gross margin, the changeover itself from Hopper to Blackwell?
That's correct. So as you come off of some of the older platforms, you have more price competition, and as we said, we had some delayed decisions because of these technology platform changes, and so that's really impacting that, along with tariff uncertainty, drives a little bit more prudence in setting margin expectations.
Got it. Thank you. Thanks for taking my questions.
Thank you for your question. Our next question comes from the line of Michael Ng with Goldman Sachs. Your line is now open.
Hi, good afternoon. Thank you very much for the question. I was just wondering if you could talk a little bit more midterm about your demand outlook. Are you, and apologies if I missed it, but are you reiterating the $40 billion revenue target for fiscal 26? And perhaps you can talk a little bit about any changes that you might be seeing from a demand perspective, aside from the timing of the technology platform transition and the macro uncertainty. Thank you.
Yeah, we remain very confident with our midterm and long-term growth. So especially Blackwell product line, we have a very strong demand, and also our coming soon DC BBS data center building blocks total solution. We see lots of customers are really interested in our data center total solution. So the demand, the growth will keep strong, and yes, the tariff and some macro economy uncertainty. We at this moment do not provide the guidance for fiscal year 26. But when it's the visibility become more clear, we will share at that time.
Great. Thanks, Charles. That's very helpful. And just as a follow-up, can you talk about whether or not you're seeing differences in demand between HGX versus NVL 72 racks? Any differences there, either in customer demand or your ability to fulfill demand on either product? Thank you.
Yeah, we see a strong demand for kind of GB200 NVL 72 and B200 liquid cooling. But customer liquid cooling data center basically a little bit dead. So that's why they are waiting there, waiting a little bit more than what we expect. So, but however, the solution, their data center will be ready very soon. And we do see the schedule is getting much more exciting now.
Thank you for your question, Michael. Our next question comes from the line of George Wang with Barclays. Your line is now open.
Oh, hey, guys! Thanks for taking my question. Hey, Charles. Just a kind of question on the GB300. Any differences in terms of value add from Supermicro, just in terms of customization and potentially more services attached? I would presume, as NVIDIA potentially open up the components kind of more open standards for the GB300, that could lead to a better margins for Supermicro. I mean, do you agree? Just any kind of pros and takes there?
Yeah, I guess whenever the new technology, it always brings more chance to Supermicro. As you know, our B200 HGX system, for example, we are the first to have a product available, and the demand is strong. So B300 and GB300 for sure, we expect a very strong demand. And with our very mature liquid cooling solution, we have a DLC solution start to ship last year 4,000 rack, and this year with our DLC2, DLC revision 2, it offers even better power saving, water saving, and also much better in terms of noise level, right? So we believe GB300, B300, our technology advantage will be even more clear. And we are excited to see the B300, GB300 coming very soon in the summer, right? The coming summer.
Okay, great. Just a quick one, if I can squeeze in, maybe for David and also for Charles, just in terms of top two customers this quarter, combined the percentage was a bit lower versus last quarter. So is this because of quarter-to-quarter kind of lumpiness, volatility, or is there anything else kind of you want to call out in terms of top two customer contribution a bit lower?
Yeah, I don't think there's any trend, George. It's just a timing of shipments. But we don't have any concern about yeah.
Yeah. Just kind of follow up. Any outlook for the top two customers, kind of in the next few quarters? Any high level thoughts and any other kind of customer set you guys are expanding to, kind of you can talk about?
Yeah, we believe our business will continue to grow much faster in the coming quarters. I hate to mention, but still, I mean, in December quarter last year and March quarter, we got some impact from the cash flow from the 10K delay impact, but that's already behind us. So now we have a much better cash flow, and we are ready to grow much quicker now, especially with new technology.
Thank you for your question, George. Our next question comes from the line of Asiya Merchant with Citigroup. Your line is now open.
Great. Thank you for taking my question. So I know there's a lot of uncertainty with tariffs, et cetera, but is there something that you can, talk to us or kind of see how investors, AI diffusion rules, there's a lot of investor angst around that. How are you guys thinking about, your visibility and how the order should flow through, given AI diffusion could impact or possibly could impact your revenues? And then I have a follow-up. Thank you.
Yeah, at this moment, we see our demand continue to grow. And that's why we continue to expand our facility in USA, in Taiwan, in Malaysia. So overall, our technology leading edge, especially, I mean, we do continue to see the demand will continue to grow strongly. And
okay, great. And then on gross margin.
I mean, tariff for sure may create some. I mean, tariff may impact the demand a little bit, but overall, we will continue to get market share.
Okay. And then if I may, on gross margins again, can you just help us understand how you're thinking about, the margins, especially as you expand on your DLC version 2, just how we should think about gross margins in fiscal 26, sorry.
Yeah, so we're not going to give forecasts for next year at this meeting, But what I can tell you is that we have, we have published before what our target margins are. But right now we've got the headwinds of like you mentioned, the diffusion rules coming up in mid-May. We have tariffs that we have to get, find our way through. And so, those things are certainly headwinds. But on the other hand, we still have the majority of our business from U.S. customers, and so we're a U.S.-based manufacturer, and so we think that we're well positioned in the marketplace on all of those fronts. But we don't. We also, being a first-to-market provider of the latest solutions, we also think we have an edge there. So we think that we're as best positioned as someone in the marketplace can be.
Thank you for your question. Our next question comes from the line of Ananda Baruah with Loop Capital. Your line is now open.
Hey guys, yeah, thanks for taking the questions. Really appreciate it. I guess, yeah, two if I could. I guess this would be for Charles and for Dave. You guys made mention of ongoing ramp as Blackwell supply comes on. And so should we assume that means September quarter looks up sequentially from the June quarter? And just along with that, this is not my follow-up, but just like along with that, like during Hopper ramp, you had multiple quarters. That's not accurate. You had 2 quarters of 70% sequential growth. You had a 40% sequential growth quarter, during the Hopper ramp. So not like a forecast, but are those, you have 30% up here in June off of a soft March. So I guess the question is order of magnitude, can you be up? Are you saying you'll be up September quarter again as Blackwell ramps? And like those sort of Hopper order of magnitude sequential increases, Charles, sort of through cycle, is that the type of thing that you sound so when you talk excitedly about the Blackwell potential? Is it that kind of order of magnitude that you think is possible to get back to at some point as you go through Blackwell cycle? And then I have a quick follow-up as well. Thanks.
Yeah, thank you for your question. Yes, you are right. I believe March quarter we were soft. The major reason because technology transition, not just people waiting for a Blackwell solution, but also we have a lot of write down for the Hopper product line, right? So looking forward, I hope we can repeat Hopper history, kind of start to grow from June and September and December quarter. I believe so. I hope so.
Okay, that's great. And then my follow-up is actually more of a technical question. So you mentioned in your prepared remarks, Charles, about liquid cooling, the HGX B200s. And the question is how many HGXs B200? And then I guess if you want to give an early comments about the B200, how many HGXs are you actually seeing you can stack and liquid cool? And I guess I'm wondering, like, how many GPUs are folks able to stack and liquid cool with HGX? I'm interested in seeing how close you can get. Folks are getting that to the NVL72. Thanks. That's it for me. Thanks.
Yeah. For Hopper, as you know, air cooler work fine, but we like to prove. We want to establish the liquid cooling technology. So we try to promote aggressively liquid cooling for Hopper, and we successfully ship about 4,000 rack DLC to the market. And so far, the 4,000 rack run very reliable. Customer love our DLC solution a lot. So we gain lots of experience. And now our DLC solution is much mature than last year. And that's why we further prepare to promote DLC2. Our DLC2 second generation DLC will outperform the first generation, and we will have a big promotion in next few days or next few weeks. So with Blackwell, our DLC solution is fully ready, and we will provide the best DLC solution to the world to help a customer save power, save water, save money, and also improve data center performance. So we have a very strong confidence for the liquid cooling, especially for Blackwell and future product.
Thank you for your questions. Our next question comes from the line of Nehal Chokshi with Northland. Your line is now open.
Okay, thank you. Just want to make sure I understand the inventory reserve that occurred in the March quarter, and then is there any expectation that there will be inventory reserve in the June quarter, and is that part of the 10% gross margin guidance?
Yeah, so as mentioned in our pre-release and also in this release, the inventory reserve, reduced our margin by about 220 basis points. Most of that was caused by taking a reserve for some of the older inventory products, and so certainly we're watching very closely, our inventory products. However, as mentioned, the substantial reason for the expected reduction in margin is really caution or prudence regarding tariffs. I want to point out that, by the way, that we've through 3 quarters we have $16.2 billion in revenues. And that was versus last year's 4 quarters of $15 billion, and so we're very happy with where we are and the performance cycle, and even though we expect even better.
Yeah, to simplify, I would like to share. I mean, for March quarter, we have a 200-point impact from the reserve, right? But June quarter maybe, I hope, only 100 points or less. And September quarter, I hope close to 0.
Okay. And so just this inventory reserve that you're taking as a charge, that basically means, I mean, you look at the impact of 200 basis points for a March quarter, that basically equates to $100 million. And then you had $1 billion shortfall on revenue. So does that basically mean that, some percent of that shortfall just isn't finding a new home? Or does that mean that that shortfall is being resold in the June and September quarter at a lower price?
Yeah, so I mentioned that some of the revenues that we expected in Q3 were platform decision based. So that means actually that people are moving to the newer platforms in the upcoming quarters. Okay, and so what that means is that in cases where people change their minds on platforms, we have to write the expected realizable value of those, take a reserve for those, and do our best to sell them at more competitive prices.
Thank you for your questions. Our next question comes from the line of John Tanwanteng with CJS Securities. Your line is now open.
Great. Thank you for taking my questions. I was wondering if you could expound on that platform decision a little bit more. Is it customers declined to take Hopper and decided to move to Blackwell? Was it something else? Is that what I'm hearing? And was it due to design or demand or performance considerations, or was there something else going on with maybe like data center constraints or something like that?
Yeah, our customer base a little bit different from the other competitor, right? Most of our customer are kind of technology leading company. So that's why new product is very sensitive to them. And this thing is now Blackwell solution is fully ready. So we are excited to ramping up stuff now.
Okay, great. Charles, I also wanted to touch on something you mentioned before, just with, one of the biggest, U.S. server manufacturing operations. Can you just talk about your relative strength there in positioning in U.S. domestic manufacturing versus your competitive set? And how much of an advantage is that, when you are seeing tariffs going up across, multiple industries? And is that providing you any more additional demand, or is that too hard to see right now?
Yeah, I mean, as a USA company, we are able to, especially manufacture in Silicon Valley, we are able to respond to new technology much quicker and efficient than others, especially with a better performance, a better solution like a DLC2, right? And as to the tariff impact, because the tariff program is not quite settled down yet, so we are watching carefully and try to adjust our logistics, our operation as efficient as possible. Good thing is we have a huge operation in USA and in Taiwan and in Malaysia now as well. So when tariff program settle down, we should be able to quickly respond to optimize the best solution for customer.
Thank you for your questions. Our next question comes to the line of Nicholas Doyle with Needham & Company. Your line is now open.
Hey guys, on for Quinn Bolton. Thanks for taking my question. Can you just talk about your supplier allocations? Are you seeing the same GPU allocations for Blackwell as you have for Hopper? How has your supply changed as more competitors enter the market? Thank you.
Yeah, still some allocation matter, right? Kind of some customer want Blackwell right away, and we had to wait for allocation. So that situation is a little bit better than a Hopper time frame, but still some constraint there.
Thank you.
Thank you for your question. Our last question comes from the line of Mehdi Hosseini with SIG. Your line is now open.
Yes, thanks. Yes, thanks for taking my question. I'm a little bit confused with capacity. I see in the slide that capacity has remained around 5,000 racks per month, but your CapEx has been pretty aggressive. Can you help me reconcile the CapEx and existing capacity? And I have a follow-up.
Yeah, our capacity remain very huge. 5,000 rack per month, and then 2,000 rack can be GB 200 NVL72 kind of high performance rack, and so we are very fully ready for when the demand ramp up, and that's why when Blackwell become more mature, much better yield rate, and we are fully ready for that, especially for our DLC2, much better deep cooling solution.
But Charles, how does that 5,000 rack per month today compare to like 6 months ago?
Indeed, for USA, we have a 5,000 rack per month since 6 months ago. But now we are growing in Taiwan and Malaysia, Netherlands as well.
Okay, thank you for clarification.
So
and then
one
update on the CFO. Sorry, go ahead.
Go ahead.
David, go ahead.
Oh, I was just going to say we haven't fully enabled Malaysia as of yet, which we will be by the end of this year. They will be fully enabled for rack, larger scale rack production.
Yes.
I think that's what you were driving toward.
Yeah, you have the facility.
Now it's about July. July will be very ready. Yeah.
Okay.
Thank you.
And Charles, where are we with the CFO search?
When company continue to grow, for sure, we need more manpower. So we continue aggressively looking for more talent, including CFO position.
Or the Ministry of Industry of Saudi Arabia grants. These actions are part of a deliberate strategy, maintain balance sheet strength while minimizing shareholder dilution,
On the
and do
Extra
so
channel,
in a way that supports our long-term growth
stand by.
ambition.
I'll end this stream.
Now,
It's come to
turning
an end
Q1
very
results,
abruptly.
we
And I'll bring you
produced
over now to the main channel.
2,212
Stand by.
vehicles, a 28% year-over-year increase, and delivered 3,109 vehicles, up more than 58% year-over-year. Importantly, this was achieved despite temporary systems issues in Saudi Arabia that have now been fully resolved.